Miami Condo Mondays is a live podcast on the first workday of the week at 4 p.m. South Florida time. The program features former journalist and current Wall Street consultant Peter Zaleski of the Miami Condo Investing Club and former lender and veteran condo broker Jenny Huertas of CBRRealty.com. Recorded weekly in greater downtown Miami, this one-hour discussion will provide a refreshing and sometimes controversial perspective on the state of the South Florida condo market from a pair of seasoned real estate professionals who do not always agree. The program won't tell you what to think about the South Florida condo market, but will give you something to think about before buying, selling, taking listings, or financing units. This podcast is not authorized by the Miami real estate industry and will quite possibly annoy many of its figureheads. Welcome to this week's episode of Miami Condo Mondays, broadcast live on the social media accounts of Peter Zaleski and Jenny Huertas.
Happy Monday, Miami. This is Peter Zaleski. I'm a condo consultant. I'm also the founder of the Miami Condo Investing Club. Check out our website, miamicondo.club. It's 4 o'clock on Monday, the 8th of September. We're going to be talking South Florida real estate, South Florida condos. We're also going to take a look and we're going to name the names of the best and the worst condo markets overall, as well as the best and worst condo markets vintage, which is 30 years or more. These are the condos that are under the gun because of the Surfside collapse back in June of 2021 and the legislation that followed. And as a double bonus, because we did not do a podcast last week due to the Labor Day holiday, we're gonna also take a look at what's gone on since the Liberation Day tariff policy went into place. So we're going to be taking a look at that. We're going to be taking a look and naming names at top 10. Actually, top 20 best and worst condo markets in South Florida based off of the Miami Condo Cliff Index. My co-host, as usual, Jenny Huertas. She's the broker owner of a firm called CVR Realty. Check out her website, cvrrealty.com. Jenny, how's it going? Happy Monday.
Happy Monday. Happy September. Happy season.
Happy season.
Yeah.
Jenny, we're now in the final 2 months of the summer buying season. Summer buying season goes from May through October. So we're pretty much, we're wrapping it up. If we were a plane and we were flying into Fort Lauderdale, Miami International Airport, we'd be coming over the Everglades right about now. And pretty soon we'd be getting our descent. We'd be touching down, and then we would have that joy of going through TSA. Something to think about, Jenny. Something to think about as we kind of land this plane. Jenny, as mentioned in the opening, I want to deal with two issues we had off last week because of Labor Day holiday. I hope you enjoyed your holiday. It was a little bit rainy, a little bit wet. People may or may not be able to hear right now, but it's actually thundering outside. So if you are stuck in traffic right now, and maybe you're stuck on I-95, you're going north, or maybe you're going south on Dixie Highway or Federal Highway if you're up in Broward in Palm Beach County, good luck with the rain, and turn off that soft rock. And put us on. Remember, every Monday, 4 o'clock South Florida time, we do this conversation. We give you everything you need to know going into the upcoming week. So, that being said, Jen, let's go ahead and get into our discussion today. I think what I'd like to do is I want to get into the best condo markets as well as the worst condo markets. But before we do that, I'd like to sort of take a shot at the newsletter I put out yesterday. And anybody wants to read that newsletter, they can go to miamicondo.club. Newsletter had to do with what sort of happened before Liberation Day, April the 2nd, and what happened after Liberation Day, April the 2nd, and to kind of lay it out for people before we kind of get into it. Liberation Day was when President Trump announced a brand new strategy, a policy pivot for the United States. Prior to April the 2nd of 2025, the U.S. stance was globalization and free trade. Tariffs, generally speaking, according to Morgan Stanley, as well as other financial companies, Wall Street firms, if you will, tariffs were about 4% across the board as a result of Liberation Day tariffs. And we all remember what happened. They were announced, the stock market then started plummeting. The bond market was out of control. Rates were going up because the United States was seeing it possibly a greater risk. It's since rebounded, and now stocks are at record highs. Bond market is it's stabilized. But what we've come to realize is that the average tariff now is about 17%. So we went from less than 4% to now 17%, and in some cases 22%, and then certain markets, based on President Trump's opinion on that particular day, they could be as high as 50%, like India and Brazil, and then China. I can't even keep track. China at one point was like I think 145% tariff or something of the sorts. Now, a couple deals have been announced, whether or not anything's been finalized and ratified by the necessary bodies of each government. That's kind of up for discussion. So all of that is going forward. We came in the summer. We were predicting a summer of paralysis by analysis, a summer of wait and see, because there's simply too many unpredictable factors that are out there. And for the most part, it's pretty much kind of relaxed. We still don't have clarity, but we also have some added confusion as of late because a federal judge ruled that President Trump's tariff policy is illegal. And potentially, U.S. government might have to pay back, refund all of these tariffs that have been collected on anybody importing product, and just kind of walk it through so everybody's clear about it. When you place an order overseas, whether it's China or it's Latin America or anywhere else, the people bringing it in, they have to submit the paperwork, and they also have to pay the tariff. So it's actually the individual bringing it in who's going to be paying the tariff. Now, that tariff might be subsidized by the supplier, but generally speaking, person, in order to get the cargo released, you got to pay the cash and you got to give them the paperwork. So what's happened thus far is that the companies have been absorbing this tariff, but going forward, there's a lot of question about whether or not they will be able to. One of the companies that came out and said that they were absorbing the tariffs was GM, the big automotive manufacturer, General Motors. GM and General Motors, one and the same, as well as Walmart. Walmart said it took a hit on profits because it's been absorbing these tariffs. So that's kind of the state of the market. And because we went into September, I decided to go ahead and take a look at seeing what the Liberation Day policy pivot, what kind of effect it had. So, the world before Liberation Day and the world after Liberation Day, and kind of tied into that, you also got this very aggressive immigration policy where people are getting picked up off the streets by members of ICE, Immigration and Customs Enforcement, wearing masks, not identifying themselves, grabbing people, sending them to different places. Florida had a alligator Alcatraz, this place out in the Everglades located on Tamiami Trail, which is effectively 8th Street or Cayocho. So anybody walking out of Brickell City Center, if you were to make a right, go 50 miles due west, you end up at Alligator Alcatraz. Well, there was a lawsuit filed by a number of different bodies, including the Miccosukee Indian tribe, and a judge ruled that they need to shut it down. They gave them like a 60-day window to shut it down. We'll have to see how that kind of plays out. But these are some of our factors. These are some of the issues. We also did a report a few weeks ago talking about international passenger traffic through Miami International Airport. International passenger traffic was down 1.2% in the first 6 months this year. If it continues on for the year, it would represent the first time since the pandemic year of 2020, there's actually a drop in international passenger. Because you remember right after we kind of got through the pandemic and people were a little bit more lenient because the vaccine had come about. People were traveling a lot. International travel numbers have been booming everywhere. Well, MIA, they're down 1.2%. And here's the shocker, Jenny. Growth was supposed to be, as it had been in 2023 and 2024, growth was supposed to be 8.5% international passenger traffic, but instead we're down 1.2. So we're talking about a 9.7% swing. What is that in real numbers if it plays out for the year in terms of what was projected versus what played out? That's going to be about 2 million round trip passengers or roughly a net of 1 million people. That's how many potential people we could be losing who could be coming here and spending money in the hotels, spending money in the bars, buying stuff, going up to see Mickey Mouse up in Disney, go down to the Keys to do diving, do all that type of stuff. So all of this is sort of in question, and that's kind of what prompted me to say, okay, let's go ahead and take a look at this pivot policy by President Trump, the Liberation Day tariffs. Again, took it from less than 4% to at least 17%, but in some cases 22% or even higher on certain countries. And what kind of impact is that having on condo prices? So what we did is we pulled the numbers. We looked at overall for South Florida. We then looked at Miami-Dade. We looked at Broward. We looked at Palm Beach County. So South Florida will be a combination of all 3 counties and then county by county by county basis. Okay. And what we found, Jenny, is basically the average condo sales price is down 10% between April the 3rd, remember Liberation Day is April 2nd. So between January 1st and April 2nd versus April 3rd to September the 3rd. So it's not the same amount of months, but we worked that out because we did an average number of sales per month. But pricing 10% down on a price per door basis, and on a price per square foot basis, 7% less. So if you sold your condo before Liberation Day, on average in South Florida, you would have got 10% more per unit or 7% more per square foot versus kind of what they're getting today. Now, there are a couple different factors. Some of the factors include that there was a legislation that was revised by the Florida legislature from their session. It has to do with the 2025 Florida Condo Association Financial Cliff, which is stuff related. Ooh, boy, I got a shot. Can you still see me?
We are back live. I'm sorry about that, everybody. We're recording this podcast in Miami. It's September. This is the heart of hurricane season. And I guess some electricity must have hit a transformer or something. When it did, it knocked out my internet. And as a result of the internet going out, I was lost. So rest assured, if you are just joining us now, the beginning will be simply edited in. And if you're watching us earlier, and you're no longer around, you'll be able to pick it up because I'm going to put it together in edited copy. So we'll go ahead and get into that. So Jenny, what I was talking about before we had that lightning shock to the transformer or whatever it was, I was talking about how we're basically in a time of paralysis by analysis. We're looking at the symbolic milestone of the pivot in terms of the economic policy for the United States, where we went from free trade, we went from globalization to suddenly more of a protective stance and higher tariffs, which are now coming in at a minimum of 17%, compared to less than 4%, according to Morgan Stanley and other Wall Street firms. So we decided to go ahead and take a look and see what kind of impact it was having on condo prices. What we found is that the average price per unit is now 10% less than it was prior to Liberation Day on April the 2nd of 2025, and the average price per square foot is down about 7% or so. Do you have any immediate reaction to that? We're not saying Liberation Day has been the direct effect on condo pricing, but ultimately it's a moment in time. It's a line in the sand that gives us the ability to sort of monitor things. So, Jenny, any immediate reaction in terms of pricing being down 10% per door, 7% price per square foot on South Florida condos since April the 2nd of 2025?
Well, I believe it has to have some impact for sure. But also the prices is where the market was in stagnation.
Yep.
So nothing was moving. And, the psychology of the seller and the buyers are changing because if you need to sell, chances are that you have to lower the price to a point that even though wasn't what you expected is what you get.
Yes.
So, yeah, I can see why this happened. And I'm sure what is happening in our country or the world, because we also have an impact worldwide. So definitely has to have some sort of impact on this lowering of the prices. 10% of it is a bunch of money, even in a $300,000 average, and the lower end pricing means $30,000.
Okay, and let's get into the real numbers. So here's what we had going on between January the 1st and April the 2nd, which was Liberation Day. That was the day when President Trump stood in the Rose Garden and he was holding up that sign and he was pointing out to all the tariffs per country. So from January 1st, remember, President Trump got inaugurated on the 20th of January. So President Biden was in office for the first 19 days of the month. But basically January the 1st through April the 2nd, there were about 6,100 condos that traded in all of South Florida. The average asking price at the time was $688,000 a door, or $442 a foot. If you fast forward to since Liberation Day, so we're going to go April the 3rd through September the 3rd, the average asking price is coming in at $627,000 a door. So $688 a door before Liberation Day, $627 a door post Liberation Day. Before Liberation Day, price per square foot, asking price $442. After Liberation Day, average asking price $415 a square foot. So you got about a 6% difference on the asking price and about 9% difference on the asking price per door. 6% on the per foot and 9% on the per door. Now, in terms of transaction price in South Florida, before Liberation Day, the average transaction price, this is a closed deal. This is a process that went through the whole process. They traded for about $652,000 per unit. Since Liberation Day, so April 3rd through September 3rd, just to keep repeating the dates,
The average transaction price is coming in at 587, 10%. So 652 was the average transaction price before Liberation Day, 587 since Liberation Day, and that's where you get your 10%. So ballpark figure-wise, you're talking 70 grand or so. Now, on a price per square foot basis, $420 a foot was the average transaction price before Liberation Day. $390 a foot is what you're coming in post-Liberation Day. Again, about 7%. And then finally, days on market. How long did it take to do a deal before Liberation Day? For the units that did trade, 92 days. What's it now? 97 days. So it's taking a little bit longer. But the good news is the number of deals has actually gone up about 2%. So the average number of deals per month before Liberation Day, 2,039 deals in Miami-Dade, Broward, Palm Beach County. Right now, since Liberation Day, 2,079. So roughly an extra 40 deals per month since Liberation Day. I would argue that's because you got lower prices. So as prices come down, more people are going to get in the game. And now we have this whole talk about possibly interest rates being cut as soon as next week. Some people are saying the cut in interest rates by the Federal Reserve when they meet, they could be 50 basis points and or 0.5%. Right now, mortgages, they were starting about 7% or so for just the normal mortgage rate, not somebody with ideal credit, but just 7%. Call it a 7 handle. Some are predicting very soon we could get mortgage rates that begin with a 6 handle, and then by this time next year, they could begin with a 5 handle. We all know when interest rates go down, housing activity goes up. When interest rates go up, housing activity goes down. So, Jenny, activity is up since Liberation Day, but prices are down. Have you seen that? Are you aware of that? Or does it feel like that? Or is this maybe an anomaly? Is this something new you didn't see coming?
No, yeah, I can feel it. I can see it. It's happening because in my office alone, we had transactions that were staying there for months and months, and the sellers had to capitulate on the price, and they were receiving offers below asking price. And I see some reports of the industry where they say that almost 50% of the listings are selling way below asking price. Why? Because the buyers look at how many days this property is in the market and they feel like they can offer less. So yes, we're saying a real buyer's market happening. It's just not something that we are predicting is really here.
Interesting. Okay, so that's something for people to think about just as we go forward. And again, the Federal Reserve, the Federal Open Market Committee, this is a group that votes on federal funds rate, which is an interest rate that's really kind of crucial to what goes on with the mortgage rates and credit card rates and auto loan rates and stuff like that. They're meeting next week, 2-day meeting. They'll be making an announcement, I think, on the 17th of September. And then they'll have another meeting in October, and they'll have another meeting in December. There is no meeting in November because of Thanksgiving holiday. So that's something to keep in mind. Now, Jenny, I mentioned, you could see interest rates come down and be in a solid 6 beginning, or probably by the end of the year, but possibly even a 5 going next year. Now, one of the things that's interesting about the interest rates is that the Federal Reserve, they have 2 mandates. They're the ones who kind of deal with economic policy. They're the central bank of the United States. They got 2 mandates. One is inflation. They want to keep inflation below 2%. And the other one is ultimate or maximum jobs or maximum employment. And what the Federal Reserve is suddenly faced with is we got inflation down to about 2.3%. If you remember back during the pandemic, certain components of it got as high as 9%. And now we had it down to 2.3% in February. It's now reversing and going back up. So it's coming in at somewhere in the ballpark of 2.9%. So it's going in the wrong direction. Traditionally, the Federal Reserve would raise interest rates to kind of slow down demand and try to make it a little bit more of a reasonable market. So there's not so much demand like we saw during the pandemic where all the prices went up and you couldn't get your hands on it. So the Fed was right there. They've been focused on it for 2 years, 3 years. Now suddenly they're going in the other direction because job growth is slowing. The unemployment rate is going up. Some will say it's because of Liberation Day tariffs, because of the uncertainty involved with it. Companies don't know if they should hire more people, or if somebody leaves, should they replace them? You also got the AI factor that's starting to kick in. So the Federal Reserve, they got 2 responsibilities, and both of them are sort of going sideways. And now they have to decide, okay, which one do I deal with? I'm somebody who, I don't multitask. I do one thing at a time. And I don't know how you are, but the Federal Reserve right now is being asked to multitask. Do we deal with inflation, which was close, but it wasn't where we needed to be at 2%? Now it's going to 2.9. Or do we deal with employment, which in theory, from